Hello and welcome again to Stocks Advisor channel. In today's episode, we will talk about Emergent BioSolutions Incorporated, traded at New York Stock Exchange, ticker name EBS. Well, first of all, what happened with EBS? What's happening actually? What you see, it's general decline wave that we have here after having really nice upwards trend. If you look also bigger scale here, starting from mid of August. And which took place, let's say, in the form of several major waves here, actually major three waves, but the second one was consisting of another two. Now what we have is a decline, and the price at the moment stuck at the obvious support level, which is in the area of in the vicinity of 75 plus minus, let's say, at down. Then it worked also as a little bit an attractor today. You can see we finished the day with this white upwards, let's say, candle, but still upward shadow here is a little bit high for this candle. So it looks like it's just a temporarily rebounds from this current trading channel that we just looked at the bigger scale, and looks like the price will further go down. And the reason for that is the overall statistics and actually the speed of decline. Because if you look at the speed of decline, you really need to look at moving averages, how they work, how they go, and you can see that currently moving average 20, the green line here, is going downwards with acceleration. So its second derivative is actually smaller than zero, so it's declining even with acceleration. The same is true for moving average 50, the blue line. Moving average 200, the red line, is still kind of let's say only bending, so it's kind of stable. RSI here touching oversold area, so this is positive momentum, of course. But if you look at MACD, it's still flattening. It's not yet forming any clear pattern, so it might take another negative wave here to form really the bullish momentum. So this what might be happening, because if you look again on the bigger scale, you see there is a long way to, let's say, to go further a little bit down, of course, with some rebounds. And the principal level where everything really should stop from declining, it's obviously this trading channel between actually about 50 and 58.15, but it might even not reach there, because still we might have rebounds. But we need to be prepared that it could go there. It's still allowed according to technical considerations. So with this being said, let's look how would be the best way to trade here according to, let's say, the current situation. And for this, we really need to first of all note that we have here increase of the volume several days. So in general, people are seeing this support channel 71.58 and 75.02. So people see this, and they of course think, okay, price could rebound there, and that's why you see here the volume is increasing, although increase of the volume didn't really help, and the price still keeps slightly going down. But we also need to take into account that this might be a short rebound because of other important parameter here. Let's look again on magnification. It's moving average 20, so the distance between moving average 20 and the current price action is quite high, and this often works as a very strong attractor. We know classically that moving average 20 in general is a strong attractor if there is a big difference between moving average 20 and the current price, especially if the pattern is so-called 250-20. So what does it mean? Let's write it here. So once you have three moving averages allocated like 200 on top, 50, and then 20, and then below on that you have your price. It's classical, of course, it's a descending pattern, but what happens if the difference between the moving average 20 and the price action increases too much? Usually if it goes up to 15-20%, that's where exactly on the boundary of this, it means that momentarily the moving average 20 might work as a very strong attractor, but later when it attracts the price, it works also as a resistant there, as a resist level. You see those examples in the previous decline wave that took place from August to, let's say, all the way to November. Always when the price was too far from moving average 20, it rebounds, so it's a trajectory. It's a classical known thing, but here we see this really manifested strongly. That's why it also explains why the volume is increasing, because people also are seeing this, of course, and they are expecting to buy. But also there is this big channel lower, which we need to also keep in mind and appreciate and anticipate the price going there, so at least to mitigate the risks of going there. So with this being said, let's put this one here. How to buy here? Of course, you don't want to miss this first opportunity. Therefore, you can already enter in the current channel, which would be between 71.58 and all the way to 75.02. So let's write it here. This will be already, so you can already start slowly buying, but still you need to keep in mind that this might be a little bit longer trade, a little bit longer play than expected, because the price might start going a little bit lower. And if it goes lower, technically still there is another clear level of support resist where you can buy. It's this one. It's between actually 63.05 and to 66.62, because this one also worked in April. It's really a long term ago. We really need to look, because in general the price was very positive later time. So these levels, let's make them a little bit thicker for our convenience. So this level is a secondary level to buy. Still, according to technical expectations, the price could go there. So let's write it again as a call out. It will be 63.05 and 66.67. So still here, let's write it again. Still there, it could be due to technical correction, because it's expected to go there kind of, but we cannot say that this is the end, because as I mentioned, the price can go really lower, especially if negative catalysts kick in. So let's say these two levels are technically based, because we also need to have a rebound, and at rebounds we can make profit here, and that's actually aim for this strategy, for this trade, to take profit at the rebounds in the current pattern, especially for daily traders. And speaking of profit, always here would be advised to take profit from, let's say, 10 to 15%. That's what we usually advise at our channel. And really it's important to take it once you can, because you can then either re-enter if needed or check other opportunities. But before you take the profit, you don't have it. This is very important. Having a position which is profitable, it's not yet having a profit. You have profit only when you press sell button, and then you can start again. So really have a philosophy of having profit often and re-entering, because this way you can increase your money. If you just sit and trying to become rich from one trade, this is usually not possible and kind of a recipe for disaster. So with this being said, these two levels are for technical trade based on non-linear averaging down. But if negative catalyst kicks in, of course, we need to, not to expect this, but we need to appreciate this possibility. And then let's make these levels thicker. We could go all the way to these levels that we just discussed, the very last ones, which is the principal trade level that was also seen by beginning of previous year. And it's not expected at all that the price will lower than this, which is on the top is 57.67, and the lower one will be about 51.38. So if we have any negative catalyst coming, then this would be the level to just to keep some funds to buy in, because this way you will be quite safe. And while others, let's say, will be exiting with losses, taking losses, you will be just calmly buying in, because you will know what's happening. And then you can just wait for a major rebounds and make your profit still there. This strategy is a little bit different from, let's say, stop loss approach, because we don't do stop loss technique. We do more, let's say, non-linear averaging down and risk mitigation. It might take a little bit longer time, because you need slowly, gradually buy in, but it also gives you less risks with respect to having losses, because the idea is that you either take a profit or you exit with a draw or a minimal loss, because this way of trading is tuned for not having losses and risk mitigation. And once you mitigate all possible risks, what remains for you, of course, is taking profit. So with this being said, this is the way to buy in. Still very classical trade here. So the way you buy through will be 5 portions play. So you can buy with the 1 portion in the first channel, then you can slowly buy through the second channel. If the price declines, they are still based on technical, let's say, correction. Well, not really correction, but descending. And if negative catalyst kicks in, especially this is possible for bio companies, we always need to keep this in mind, because any news for bio company could really shoot it down. So it's always wise to have some funds there for this situation. And this would be another remaining 2 portions with which you can buy through the third channel. This way should be the best optimization for profit versus loss. So good luck with this one, and see you at another episodes of Stocks Advisor channel.